Hi guys, it's Birb here, and today I've got for you a very simple stream of thoughts, okay? First, an unbreakable number one rule, in my opinion, is so that you do not over-interpret and overestimate the technical analysis. Because when you think about it, it's nothing else but just a bunch of superstitions. As behavioral finance would explain, we tend to act upon emotional states, emotional conditions that are mainly fear and greed, okay? And then whatever is stronger, it takes advantage. It becomes the leader over the rational, over any logical ways of acting, okay? So we, because of our emotions, tend to act irrationally, and irrationality in the market, in the finance, means losses most of the time. So technical analysis works because we make it work. The chart patterns work because we make it work. The behavioral finance would explain that based on the scientific research, our human brains produce the shots of dopamine, the hormone of happiness, whenever we properly recognize the patterns, right? So there might be the case that whenever you see a cat in the street, a black cat crossing the road, you would actually get the shot of dopamine right into your veins, from your brain, okay, because you managed to recognize the pattern. And I believe that this is, some sort of like evolution-based way of how our body works. Because, for example, when you used to spot a bird in the forest or a wolf, so that that you should better run, okay, otherwise you die. So it is mainly for your safety. But from a practical point of view, chart patterns work because we make them work, because whenever we recognize the patterns anywhere, bird in the forest, okay, school, like some, maths classes like triangles, spotting the rectangles and other like figures, okay, every single time your body is fed with the dopamine, which is addictive, okay, and it rewards you for recognizing the patterns, which is exactly why we try to search subconsciously for patterns everywhere, even try to spot them whenever they are not existent, okay? But spotting the patterns, whenever many people recognize the same pattern, it works as a self-fulfilling prophecy, because we believe it's supposed to resolve in one way or another, okay? And because we believe that, that it's more bullish or bearish, more people press long than short buttons, okay, and automatically the price is just going up, right? That's the simplest way for how it usually works. Of course, there are macro trends which come from mainly some economic policies, monetary policies, the interest rates, and money supplies, the inflation, and so on and so forth, okay, from the intermarket correlations. But these are the macro trends. We are talking about the technical analysis, mainly about the medium and low time frame point of views, okay? And the technical analysis works because we make it work. This is the self-fulfilling prophecy, and you should never overinterpret it. You should never rely with 100% certainty in these patterns, okay? You should never, as a matter of fact, assume the technical analysis or any chart pattern would work with 100% certainty, 100% reliability. The word is imperfect. The technical analysis is inefficient. There are a lot of inefficiencies in the market, okay? The markets are not fully efficient. They are adaptive, as a matter of fact. They are not efficient, they are not inefficient fully, they are just adaptive. They depend on the situation. They change their dynamic. But I see so many people literally over-interpreting the technical analysis. They would say, okay, the support breaks, there was a very recent example of Bitcoin's, another attempt of breakdown below $30,000, okay, and one more time the burst got literally liquidated locally, okay, late burst, who believed that breaking the support is bearish while ignoring the larger context, the larger picture, okay, they got wiped out, they got liquidated, they got squeezed. That's how it works. Okay, so and the fact that the support broke, and people were trapped beneath, believing it's bearish, it doesn't make the technical analysis, not work, if you know what I mean, right? It is just inefficient. It is because of our behavioral, psychological reasons. We make it inefficient, okay? But do not take it for granted. Do not take any support or resistances literally. There are no price levels. There are only price and resistance areas, zones, supply, demand, blocks, layers, breaks, no matter how you call that. These are not perfect points, you know, mainly because it would be like, what are the chances that every single body, every single person and trader on this planet chooses one support over another, right? There are 7 billion people, more than 7 billion people. What are the chances that all the traders at one point on one market in one time pick exactly the same level to put their bids or asks at? It's impossible. Okay, chances of that are practically impossible. So because of that, what you see is, you do not see supply resistance levels, you see supply resistance territories, areas, ranges. Okay, that's how it works. Do not overinterpret technical analysis. Do not over rely on that. Do not gauge with 100% certainty. There are no certain things in the market. Nothing is certain. Okay, and whatever news-driven impact comes from the market, some unreleased, unprecedented, unexpected news from Fed, for example, they announced that they put people, to jail for trading cryptos. Like, even the best bullish pattern of technical analysis, the best bullish symmetrical triangle or ascending triangle or head and shoulders inverse, whatever, the best bullish pattern does not stop this type of a news-driven impact. Okay, that would cause a sell-off. It's impossible. So any news-driven effect, any news-driven impact, okay, on the price is always going to be stronger than any sort of like bullish pattern or bearish pattern. Is always going to take the priority, mainly because of bots, because of algorithms, which are usually based on artificial intelligence, and they sell off immediately whenever the bearish headline hits the news, or the long immediately whenever the bullish headline hits, right? So that's as simple as that. That is kind of like how the markets work. The markets are inefficient because of human errors, so many big institutions actually take bots and algos to do the job for them, right? And you cannot compete with bots, right? Your attention span, your time span for action is definitely way longer than any bot which acts immediately.